The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to an excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. And, yeah, what can you say? Just another great day out here. And, of course, as all great days go, we want to see how the market thinks it's going. It's up 1.5 points on the S&P cash. And, of course, not a great deal of movement out there, up 2.5 points on the NASDAQ and off 13 points on the Dow. But energy, I can't say that you've got a lot of it. 1.8 billion shares on the New York Stock Exchange consolidated tape, which is all the stocks, all the shares that trade on the NYSE, whether they traded on an ECN, and the ones on other exchanges, except the NASDAQ. So pretty good indication of what the true volume of the market is out there. 1.8 billion shares. Normally, on a day like this, you'd want to see a continuation with a sign of strength. That sign of strength would probably be 4.5, 5 billion shares, at a minimum 4 billion shares. Let's say that we'd be conservative because it is summertime. We had about 3.5 billion shares yesterday, 3.4. So not a whole lot to write home about. But certainly when you make new highs, you'd like to see that sign of strength. We have not gotten it, didn't get it yesterday, and certainly no follow-through even without volume today. So you have to be a little concerned. My thoughts are that they are going to try to hold this market up. Maybe you've got a risk of 10 points higher in the S&P over the next few days during fund buying. But from Trim Tabs data, it looks like there's not going to be a whole lot of cash coming in this market. And we'll have to see. But I suspect we have a little bit higher possibly to go and a great deal lower. So I am bearish. I'll put some new trades out in the Tech Insider today and the Path of Least Resistance, the daily newsletter. And we'll see how these play out. But it is going to be a interesting day, to say the least, probably into the close, as we see some of these stocks that and ETFs that have broken above highs. Had a bunch of them in the newsletter this morning. Very interesting to see so many stocks breaking highs on not just light volume, but extremely light volume, 50% previous highs. So we are starting to get into the danger zone. I haven't pulled a trade on an index yet, but I have found some individual areas and sectors that I think are fairly weak. And we took action on them this morning. I think probably by next Monday or Tuesday we'll be short the indexes also, but I'll have to wait about that. Anyway, as we get started in the market, today in 1962, in the wake of President John F. Kennedy's widely quoted, but maybe not truthful, remark that my father always told me that all businessmen were son of a bitches. The Dow Jones Industrial Average suffers its worst one-day point drop since the crash of 1929, as it sheds basically 35 points or 5.7%. It was called Blue Monday in 1962. Volume is a huge 9.35 million shares. We get that in about 10 minutes these days. And the ticker runs 2 hours, 28 minutes late in recording the day's closing prices. And what can you say? Sometimes you just say one thing and the market's nervous and it twitches. Sometimes people can say stuff all day long and people ignore any warnings. But I can imagine that if you go back and look at the charts, that the market was ready and willing. And who knows, maybe he had a bunch of short positions on, or maybe his family did. They had a lot of cash. It would be nice to just be able to call up the president and go, hey, we need a huge move in the market today. We're really short, so if you could just say something horrible, we could really rake it in. And, of course, back then, I don't think people looking that closely to friends and family of the president. Not saying he did it, but, boy, it would have been pretty easy back there to get away with it, I would imagine. Other things going on. Tesla's was off a little bit earlier this morning. TSLA, the electric car companies, basically had a huge run, of course, but was slapped with a junk credit rating by Standard & Poor's because of considerable uncertainty about its long-term prospects. The unsolicited B- ranking, that meant nobody bothered to ask, they were willing to give it. 6 levels below investment grade, reflects a business constrained by Tesla's niche and independent marketing position. S&P, the world's largest credit rating agency, said in a statement yesterday. So it's kind of interesting to see just out of the blue a downgrade, but most likely there was somebody asking about it quietly in the background that didn't want to be named. And that's probably somebody like a CalPERS or a big fund wanted to get an updated rating on Tesla before they bought any of these bonds. And, of course, pretty much horrible. And yesterday, I got a phone call from one of the members in the den who had a computer that was all virused up. We all dread the day that we find our computer unusable because of all kinds of viruses. Interestingly enough, he told me that he was getting some kind of coy demands on whether or not they could get rid of the viruses on his hard drive if they just show him a little wet their beak a little bit, send them a little green mail. That is actually called ransomware. Held ransom, John from Philadelphia. And one of the things I thought was interesting, he brought that up, was last night and in this morning, some of the newspaper accounts crossing lines, is someone's figured out how to break into iPhones and do the exact same thing. There's a program very popular with people in New York and the big cities, but mostly New York, L.A., where if someone steals your iPhone, you can track it back down, and it's an app that's not easily identifiable, so a lot of people don't look at it. Most of the people pull the batteries right out and send them across to China, so they're not reused here in the United States. But the ones that are kind of interesting. Anyway, a new wrinkle, not on PCs but on iPhones, where they figured out a way to hack this program that automatically would shut the phone off. And, of course, when you're trying to turn your phone on, you get this little warning that says, your phone's been frozen, and if you send us a few bucks, we'll unfreeze it. And just interestingly enough, a new wrinkle on something that's been around for several years called ransomware, which is we're going to make your device unusable if you don't send us some cash. And nicely enough, most of these guys do unlock their devices if you send cash. And then, of course, promptly charge your credit card and try to hack the rest of your life at the same time. So not a good idea to send them any cash. But there's several tools to go and get around that. I don't know so much on iPhones on how you do that, but it is, especially Apple's been crowing a long time about nobody writing viruses for their Macintosh OS. Well, it was 1/10 of the market or less. Why you go after the one and the biggest single market share? And right now that is Apple's iPhone, if you're doing mobile hacking. And they found a way around it and a way to do ransomware on an iPhone. Just kind of interestingly enough. 3D Systems got whacked today. They announced that they're going to have a public offering of another almost 6 million shares of its common stock, trying to raise another 317 million shares. One of the things you really need to worry about, in fact, I put out a special alert in the Tech Insider to stay away from any 3D companies January, was it 13th or 17th or 11th, somewhere in there, said that this sector had hit a all-time high and probably not going to see it again for years to come. Problems with these companies doing SSYS, 3D systems, and a great deal is that these companies can burn cash incredibly quickly. And after their IPO, everything else, 3D systems kind of, especially with a huge amount of acquisitions it's made over the last 2 years, kind of starting to run out of a little bit of cash, going back to the well, and going to offer another 6 million shares. I suspect that this thing's probably going to be back down into the $30, $36 range before it is finding a bottom. And that would just be where this really started taking off pre-split, split 2 for 3 at one point. So if you go back and look at the charts, it's not real evident. You don't see a lot of difference in the chart, but enough. And I suspect that's where it's probably going to find some level of support, but really became a giant football in that 3-2 split. It is a mad market, and we'll have to see how things work. Up 1.5 points on the S&P cash, 1.86 billion shares. So it is the dog days of summer with some rather light volume out here. But starting to see a few things hit some lows. But we'll get into that after the break. You can always give me a call at 877-927-6648. And what else? Oh, you can email me at path@tfnn.com. And be just like Jan yesterday, who said she really loved my stubble beard. And what else? Oh, you can put a message in the den, and I'll be glad to look at your particular stocks. But we're going to be looking at a great deal of stocks here today, over with the news fairly quickly. So if you do have a question, probably a good day to do it. But we've got a market kind of flat, not a lot of follow through, just a couple of days into fund buying. And my guess is that we've got a flat market, going to try to hold it up through these next few days. But we need at least a retest of probably that 1890 level. And at that point, will give us an idea whether or not we're going to see any higher prices. But I think 10 points higher, 20 points lower in the next few days. And if we can break that 1890, we probably have 200 or 300 points lower in the S&P cash. So we will be back in a bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we're going to take a little bit of a look at commodities. We've got a question in the den from John in Philadelphia. Is a USO a short? And you certainly have to look at it. I would have liked to have seen volume even shrink more than the last high of April 16th. You had 4.6 million shares there. It's really banging against the March 3rd high that had 7.4 million shares. But I would have loved to have seen this come in a couple of days ago with 3 million shares. He actually had 4.5 million shares on the 21st on a little spike. Next couple of days, you had 3.4, 2.5, actually the absolute high. I tend to like to look at my charts with the absolute high in volume in 0.5% of the high. But you can make a case out here that you tested it on 7.4 million shares with 2.5 million shares. Just even being conservative, though, 4.5 million shares. What you would have wanted to see today to actually see something is maybe a push higher and having lighter volume. This little pullback today on lighter volume suggests to me that you're going to have at least one more push. One thing that I've seen from looking at hundreds of charts over the weekend and yesterday night is the utter ability for the entire market to try to shove all their cash into energy over the last 4 or 6 weeks. We talk about Joe Granville every once in a while and his theory of the Titanic, and that is that the bow starts to go down so everybody runs to the stern. And the first stop a lot of times is treasuries and bonds, and then they actually go to cash, and then maybe gold, and there's a bunch of different places to run to when equities seem to be either overbought or auguring into the lows. No one wants to be around them. And the one thing that I can see is that no matter what, everybody continues to push into energy. And I find it kind of interesting that we've got this story where there's more oil than anybody can stand. Everybody's still shoving all the business they can or all the new shares they can into that sector. One of those stories is not correct. Either there isn't a lot of oil, which I think some probably would have picked up on that by now, and or everybody's just getting into one of the most crowded trades other than bonds in this market right now. I would have loved to see more volume into this thing, so maybe you get another couple of days. But one of the things I would think is you may just be wanting to hold your breath for a few days and get through fund buying, because my guess is that this sector has been the best performer for a lot of people over the last 6 weeks, and what they're going to do is try to put some lipstick on this pig over the next couple of days into fund buying. At that point, I think you're going to see very light volume and very high prices on USO, and we'll probably get an opportunity. But probably going to be Monday or Tuesday, I have a feeling, next week, before you see the big weakness in this. A lot of other sectors have already turned. That's why I said already thinking that there's a good opportunity to already pull the trigger on a few of these. But interestingly enough. Okay, so what else do we have here? S&P up 1 point. Not a whole lot going here. Give me a call, 877-927-6648. We're going to get to some stocks of interest. DSW, which is the shoe warehouse. Let's see. Branded footwear and accessories retailer in the United States. I think there's one by a Target that I go to, but I've never felt like going into those. I mostly wear tennis shoes or flip-flops. But it is, I guess, a lot of fancy shoes. Maybe I'll go there one day. I've got my one good pair of wingtips if someone croaks. So I'm good to go. Other than that, pretty much tennis shoes and flip-flops. But I've got some boots. But down today heavily. And I didn't look at the news headlines. Let's get the headline on this real quick. Downgraded from neutral to buy at Citigroup. Here's why the stock is tumbling. Operates 400 stores. It's getting hammered because the company reported that sales decreased 0.4%. Really? I think this thing was highly overrated if 0.4% decrease can get it to whack as bad as it did today. Anyway, we'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back. Again, you can give me a call at 877-927-6648. And we're going to look at a few other ones. TLT as a request from the Den. And, there's this nice gap I think everybody's been watching to come into on TLT. That gap down happened on June 7th of last year. It's not a monster gap, but pretty gappy for a fairly non-gappy ETF like TLT. 10.45 million shares for that day. So what do we have today? Basically, we've got 5.2 million shares. You can say we got into this gap on 12.6 million shares on the 15th of May. It did retreat from there. So we've had some energy that would be close to that gap that we come up here today. You would love to see a lot more energy back into the TLT today. So probably a little bit more ambiguous. I'd love that we wouldn't have had that spike on the 15th to make this clear, or that we would have had the same kind of candle today on that 15th, but we haven't. So a little bit of murkiness out here. What you would really like to see is this energy and that energy being the same. So I think a lot more of it has to do with the energy back up. If you look at the energy from that high back on June the 6th down to June 24th, about the same price point movement that you've seen from the April 2nd up to the May 28th high here today. And you're basically looking at about 1/4 less the energy on the way back up. And it is, I guess it is telling. So we have seen very light volume since that April 2nd. I think that would be the bigger signal than kind of the lighter volume today at 5 million shares. Now, you've got some big movements out here. And again, the spike from that June 6th high was 8.9 million shares. So that we're going into it today with 5 would be one signal. But I think a bigger issue is just the lack of energy all the way from that April 2nd low of this year all the way to this high today. So I think you're probably fairly stretched out here in the TLT. But again, as I say, in a lot of these crowded trades that have had nothing but up for the last 30 days, I suspect that there's going to be some lipstick put on these over the next few days in the fund buying cycle. So I would be watching that. Anything that's had these huge moves up where the volume hasn't just incredibly fallen out of bed, you could still see a few more days going sideways here. So just would say that most of these look like they're done, including the broad markets. It is going to be more problematic just how they're going to hold this thing up unless we get some kind of sign of strength and a real rallying cry for people to come into this market. And I just don't see it so far. So what do we have here? See what we have.
You've got mail.
Oh, we've got mail. We'll take a look at it. Your take on SPLK. I guess that's Splunk. SPLK. And, this thing's had done nothing more than head down. And you're looking at probably an ABC down yet again. You certainly need to come out and test this 4107 before you could trade this. Look at the retracement out here. Just a little bit more. So you basically got your 618 at, what would that be, 51.29. So you're 50 cents underneath the 618 retracement, which is, may just be, this is over right now on this. I can't imagine a stock this hammered not doing at least some consolidation out here. You'd certainly want this to consolidate, retest the 4107 before testing it. And of course, the gravy's out of any short on this stock, so it'd be kind of a poor risk reward out here. So that's it. Anyway, Splunk, kind of a neat company. Just one of these IPOs that was driven up to these monster highs that was unsustainable, and also their business model pretty much unsustainable for the kind of growth curve that everybody was promising them, and not a lot of difference between these. I actually looked at this short and couldn't find shares, which is a pretty good indication that everybody either knew or thought about it going much lower, but not few of those. We talked about DDD today, and I have a feeling Splunk is probably more set up to follow this chart pattern until it gets out and tests the lows. But same thing with 3D Systems. You had a high volume low out here, $43.35 at 43.35 on that April 29th low, and got a fairly decent move in volume out here. My guess is this thing is going to take less than a week to get back down to that 43.35 level, especially with all those new shares coming to market. Other stocks of interest moving today. Live Deal. Boy, is this a trader's dream out here. But of course, we brought this up on TFNN a few times about kind of being a beanie baby of stocks with not much underneath it. This has had a fairly decent volume the last few days, but Live deal. To me, you still have a good chance of testing the low out here at 227 again before this thing has made it a low. I know a lot of people were short the stock, and you can probably look at a couple of these last few days being a lot of short covering. Let's see what else we had. GOMO. Sunji Mobile. GMO. Just seeing if there's anything else out here that I wanted to look at. Pro Logistics. Now, this is not a lot of volume in that. Stryker Corporation. This one does interest me. I've got to check this one out. And let's look at the headlines on it. These folks make how can I say it? They make the balls and sockets for hip and knee replacement. Shares of Stryker surging. Medical technology denied a Financial Times report that said it plans to bid for orthopedics firm Smith & Nephew. SNN. Smith & Nephew shares have jumped 4% today. But I guess that's it. Just nice that Stryker's thinking about buying somebody. Of course, rumors are just that, rumors. And you'd like to see, well, certainly got the volume out here. You would have liked to see this thing broke and break 83.86. It basically hit it, which was that February 14th high out here. And that is back to May 28th, $83.86 today. So you've got it. You had volume. It didn't hold it, but certainly would have expected to hold 84.85 today. Not on phone. Scott from Orlando, and looking at Google. So we'll take a quick look from Scott. I don't know what Scott is actually thinking about here. Scott is listening. Oh, well, we'll look at that too. Anyway, got the post split out here. I don't know what he's asking about. This thing's just in a bigger trading range. I don't see a lot one way or the other to hang your hat on this. But that's always good to stay on the phone, so maybe you can tell me what you thought you were looking at. But I don't see a whole lot in Google that's going to change what it's doing. I know everybody has been hot to short Google. I just don't see it. I understand their earnings. Everybody else understands their earnings, and it just doesn't seem to be a lot. The other one that everybody talks about shorting out here is the Boeing company. I can see a little bit more in Boeing. But again, a company is not going to bust in halves any time in the near future. So I always think that there's probably better shorts out there than Boeing or Google. But if you were just looking at the straight chart pattern in Boeing, it certainly has a very bearish setup out here where it's coming in to this gap down of the 29th of January. And that day you had 16 million shares. We're into it today on 3 million shares. To me, this is a bigger setup in the market and a bigger market call. But to me, is this thing going to go down 10 or 15 bucks? Yeah, I think that there are more stocks out there that could go down 20 or 30% though, and those are the ones I'd be looking at. But if we go back and look at Google real quick, we're back up to these high levels. Yeah, is there no volume? There's no volume in the entire market, but not a lot of what I like to see out here, which is super high volume lows to go back and test, anything like that. I just, Google, Boeing, I just think that there are much better shorts out here, and I am assuming that he wanted to short this thing, but since he didn't phone, I don't know. Other stocks of interest, WTSL, the Wet Seal, of course, these retailers of kids or young adult clothes. I think a Wet Seal is female young adult clothes. But again, volume not really picking up out here. But almost all these malls look like, and these retail clothing stores all look like they're ready to shut the doors if you looked at the charts out here. So let's go to some of the ones that I caught in my scan, and we'll look at those a little bit more than that. Date modified. Here we go. Okay, and there's a few things. One that was interesting to me over the last few days is this Youku, which, if I'm not mistaken, is a Chinese-based, it's kind of like the Netflix of China. People's Republic of China internet television platform enables consumers to search, view, and share video content across various devices. So it's kind of half YouTube and half Netflix. But of course, I don't watch it. One of the things that interested me was just how hard the tech sector of China was getting hammered. And what we saw in the last few days is just that huge volume day a couple of days ago. But just a little bit of volume. You'd still think that we've got to go out here and test 1777 on Youku. I guess they're trying to make it like YouTube, Youku. But you've got that. And then, of course, the long-term low back here from June 24th of last year at 1769. And that's it. Okay. And what else do we have out here? That's one. Adobe is another one. I wanted to see how this was doing. This one was going up against its previous high from April 24th. That had 3.9 million shares. Yesterday we had 2.1 million shares, 1 million shares today, and getting kind of a reversal. You did go above that previous high by 48 cents. Yeah, you've done it with very light volume and closing below it, so you have at least a valid sell signal, not a short signal, but a valid sell signal. And your support is probably somewhere around the 57.50 level, where this thing has found support several times before. One of the things that you don't like is the kind of energy off this low. It really didn't accelerate. So you could probably say this thing is looking at a $57 to $65 trading range, at least for a while. Aetna, another one of these companies up here at highs. Taking a look at that. Okay. And March 21st on Aetna, this thing had 3.4 million shares at $76.71. We had $77.70 into today. Yesterday, 2.2 million shares, slightly higher today, a little bit of reversal. And of course, right now, we are still above that 71.70 or 76.71 of March 21st. So as you see that high, you'd want this thing to close back below that 76.71 to confirm yet a top in it. And if you're looking at a theme out here, it is. We're seeing a lot of stocks at previous highs, lighter volume, pulling back into the trading range. We'll be back in just a moment.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. Kind of interesting. I wanted to see how Netflix was doing. I think this thing's probably fairly close. I'd love to see a little spike in any of these big, highly short stocks, like Netflix. Maybe $20 in this thing, and really see all the volume come out of it. Really haven't seen that. Basically we've got a market that tried to move up today on it. We did set a new high for this trend. And of course, what you wanted to be seeing was somewhere around 9 million shares as we got over $380. What we saw was 5.7 million shares, 4.7 million shares, 3.1 million shares, 3.8 million shares, today 2.2 million shares. So there just isn't a lot of energy past previous highs out here. At the same time, we're going into a bar. That bar was March 24th at 6 million shares. So even if you don't count this little pop out here, which is kind of a short covering rally on it, and just use the heavy volume down day of that candle from 324, you'd want to be seeing 6 million shares in this. You had 5.7, which is about the best day as it got into that candle and went sideways. A lot of these stocks pretty much on fairly rare error, fairly light error too, and it's going to be tough. Now, we've seen some of these financials try to come back up here to the top one more time, and I don't think that there's many offering a better attempt at the highs on lighter volume than Capital One. Of course, when we look at Capital One, the last major high in this price range was January 7th at $78.48, 5 million shares. We've got into it today. We've gone above it. Now, you want to close below it again, but we've got 2.2 million so far today, and any close back in there would probably be a good excuse to say that we've got a sell signal on Capital One. Of course, some of the other financial stocks having some issues, mostly with their trading. I don't think Capital One has a trading floor, so probably not as big of an issue out here. TRW, one of these in the sector I've been watching in automotive, giving some warning signals. What you wanted to see was a piercing of the $85.93 that we have not seen yet. This thing's still, 15 cents under, so we may get this in the next day or two. TRW, Automotive Holdings, symbol TRW, needed 1 million shares. It's within that 15 cents. You don't always get it to break it, but before I pull a short on this, I'd want it to break that. So we've got maybe a day or two where we can look at that. But it is what it is. So light volume today on the downside. Watch for this one to go through that $85.93 high from April 24th. Lighter volume, go above it, close back below it, and that would give you your sell signal and a opportunity to probably come back and fill this gap between $76 and $78 on TRW. TSM, Taiwan Semiconductor. I'm going to look at a little closer view of this one. Of course, this has a lot more to do with the technology sector. One of the things you'd want to look at is this company makes chips. Those chips are available, and you can look at that $20.92 high. That is the $20, $20.92. And you got into it. We've gone above it. We've closed below it. So you do have a valid sell signal in that. So the next thing you want to really be looking at is the semiconductor space. And we'll look at that tomorrow as we come back. But until then, you can always email me at path@tfnn.com. And you can, remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.